Hello, everybody. It's Bob Anderson, and I want to do a video that kind of covers a few things um, regarding trading in today's world, which is different than trading in the original world that I started trading in, and that's because of prop firms. So I want to touch a little bit on that, and then I want to touch a little bit on these trades here, and I want to go over the specific trades that as they come across my screen. And I have a visitor here. For those of you who've been long-term members, this is Mittens. See how big she's gotten? Oh, she's such a big girl. She just jumped up on my lap as soon as I started the video. Anyways, good. She got down. So what I want to do is I want to talk about these two trades and the overnight open. I want to go over specific details because I get a lot of email questions about it. And I want to literally go across the screen in gold, NQ, and probably RTY today. It is May 20th. I want to go over the screen from about 10 o'clock to about 11:15, and I want to go candle by candle, and tell you what I'm thinking, tell you what you should be thinking if you're going to be using this strategy. Secondly, what I want to talk about right now is prop firms. So when I started this channel, August 2022, I did it because I was struggling to be disciplined in trading because of the prop firms. I mean, you pay $30, you get an account, you trade it, you can make some money. Yay, right? And the reality of it is, if you don't have something either internally in you to hold yourself accountable, or in my case, externally to me to help hold me accountable, I find that I don't care as much about the accounts as I would, for example, if it was real money with my real accounts. So I'm kind of going into two different topics. One is discipline. Apex, for example, right now has 90% off, pass in a day, yada, 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 which totally throws out the window any premise of discipline. It motivates you to even more think less, if that makes sense, to even more think less of the accounts that you're trading. Because instead of the $30 account now for a $50,000 account, it's $16. Who cares? I have found that I too become guilty of this exact mindset. That is the total opposite of the mindset that I had, back in the day when I traded these strategies right here with live money. And so one of the things that I am struggling with myself right now is balancing the thought of value in the accounts as if they were real live accounts like it was in 2010 or so when I was trading this strategy. So I struggle with that, and I can assure you most of the people watching this video that actually do trade in today's environment with today's prop firms are probably doing the same thing. So I want to go over in cut detail. If you write these things down and do these, this may be forcing yourself into discipline. Okay? Because otherwise, if you're failing today, you're going to continue to fail. What is insanity? Doing the same thing over and over again, expecting different results. Even if you change your strategy that you trade, if you're still trading it the same way, willy-nilly, the results will be the same. And unfortunately, when Apex, for example, gives a 90% off pass in one day thing, They are totally destroying everything that I am going to try to instill in you today, and that is discipline. Remember, if you don't have discipline, you're just paying them money. They're not paying you money. So who wins in the game of creating an environment of no discipline? You have to learn how to take advantage of the situation that they're creating by not allowing them to take advantage of you. Okay? So let's talk trading right now. Let's get serious for a moment here. Because it's May 20th. We're heading to the summer. It's going to get tough. For those of you that are struggling right now, you may not want to even trade during the summer. I'm just telling you. But for those of you that feel like you're on the cusp of getting somewhere, you probably are just lacking some discipline, lacking some timing, lacking just a little, a few things. But in general, keep in mind, if you got 90% off pass in a day crap flying across your screen, it is destroying it. It's like taking a heroin addict who's in recovery and throwing heroin in front of him. I mean, it's just not going to work. You're not helping him. So I know I'm not making friends with Apex right now by saying that, but they're not helping you. They're not helping you with this pass in a day stuff. They're not helping you. Okay? If you had a real live account, if you had a real live trading account and you traded with the mentality that you're learning to trade with by having a 90% off pass in a day evaluation system, you would not have a live trading account very long because you would end up blowing it up. I'm just telling you. So here's the deal. I'm going to go over in detail today's trades line by line, okay? And I'm going to talk about these two trades and the overnight open, and I'm gonna say them to you as if I'm saying them to my daughter who's trying to learn how to do this right now. And that is, don't get wrapped up in the fact that the stupid account only costs $16. Don't think about that. Think about your plan. Think about your stop loss, your targets. Always be looking for at least 2-to-1. If you're not getting 2-to-1, don't take a trade. And if you're taking a trade without a stop, you're not the sharpest tool in the shed. Yes, there's some traders that do that stuff that are making money with Apex, but what you don't understand is they're blowing 20 accounts to get 5 to pass. Okay, if that's not what you want to do. If you want to actually buy an account, you want to actually pass, and you want to actually get paid on that account, then you need to instill discipline, and you need to let the noise that's going on outside of your world regarding trading to not influence you. So let's talk about the 1 minute gold line. That is my 9 EMA on my 1 minute chart. 9 EMA in the 1 minute chart. Can't get any simpler than that. It's gold. Okay. It's what you're looking for is a 60-minute high, 60-minute low pivot. You're looking for which is that donkeying channel that creates the lines on my chart. I'll show them to you here in a second. That creates it's a line that moves up and down on the chart depending on the lowest point in the last 60 minutes on the bottom, the highest point in the last 60 minutes on the top. And you're looking for that to be pierced either up or down before you even think about entering a trade in the 1 minute gold line. Okay? So if you don't have rule 1, you don't have to worry about rule 2. Rule 2. Okay? So what's rule 2? Rule 2, smooth pullback. Now all these things are also in conjunction that you're on the right side of the trade. So like if you're going long in 1 minute gold line, then you're looking for a donkey channel high, and you're making sure your 5 minute red line is underneath you. Anyways, but so you're looking for a smooth pullback. What's a smooth pullback? Smooth pullback is the candle to the left, let's say on a long, the candle to the left has a higher high than the next candle to the right. The candle to and then and sequence and sequence and sequence. That's where what you're looking for is you're looking for that sharpness of that pullback into that 9 EMA. And how do you know it's sharp, 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 sharp? Because the tops of each candle to the left keep getting lower than the candle. The candle to the right keeps getting lower, the top of it to the candle to the left. It just keeps coming down, and it creates that V pattern that you're looking for. You don't want it to meander its way over to that 9 EMA because then there's no momentum. Okay? And then entry off the break of the candle to the left, the one that's touching the 9 EMA, entry off the break of the candle, one tick above it if it's long, one tick below it if it's short, and then, at least a 2 to 1. Okay? You're looking for at least a 2 to 1. All right? So, 5-minute red line. Relatively smooth pullback. You're looking for that donkey and channel to be pierced, and then you're looking for a pullback into that red line. But the pullback can somewhat meander, because remember, these are 1-minute candles, but 5-minute traders are looking at 5-minute candles. So you want to see a pullback that shows some decision. Okay, the decision is we're pulling back, but it doesn't have to be as smooth. But what you do want is you want that 60-minute high, 60-minute low to be pierced before it does that. Why do I keep emphasizing on these 60-minute highs, 60-minute lows? This is exactly why. I want you to grasp this. This is a box, okay? That's being created for you. This donkey and channel, it's a box, okay? And what we're trying to do is we're trying to stay out of consolidation. Most importantly, stay out of consolidation, and we're looking for signals that the market is now going to leave consolidation. And the number one signal that the market is looking to leave consolidation is when it pierces that box, either high or low, from what's been going on to its left for at least 60 minutes. When it pierces that and then kind of rolls back, that's the sign. Okay, we're ready to go. We're ready to go. Now we're building up energy, and wham. It's so common, it's almost crazy. Okay? Now, I used to eyeball it before Bob the coder showed me how to just put the donkey and channel on there. I used to eyeball it. A lot harder to eyeball it than to just look at the donkey and channel. So let me show you those setups for today. And I'm going to show you an overnight open setup for today too. That was just beautiful, and what made it valid and compared to other things. Okay. And think about what I said. Don't get wrapped up in this 90% off, passing the day garbage. Jesus, come on, folks. Don't look for reasons to create bad trading habits. I'm guilty of these things too. Okay, so I'm not sitting here, Mr. Innocent. I get guilty of these exact same things myself. Okay, and to be honest with you, I didn't even know about rule changes and all this stuff. I didn't even know, because I wasn't paying attention. I wasn't paying attention to the 90% off. I wasn't paying attention to the pass in the day. I wasn't paying attention to the BS about getting a 250K account for the same price of a 50K account. Let me just explain something to you about that. That's insanity. Why would you want a $250,000 account, even though it costs the same as a $50,000 account? Now Apex is really going to be mad at me when I say this. Why would you want that? When you're done passing, if you are passing with a $15,000 profit, you can buy the account lifetime for $60 less than a $50,000 account. But I've got to trade it for a $15,000 profit before I can even ask for a draw. But I can trade the $50,000 account for a $3,000 profit and get the same draw. I mean, it's not, again, don't fall for the gimmicks. folks. Don't fall for the gimmicks. I mean, there's so the difference between 3 and 15 is $12,000. So you're going to trade $12,000 more in profit before you can get a draw than you would a $50,000 account. Let me see. Is it because, gee, they're going to give you 27 contracts instead of 10? Who's trading 27 contracts? Who's even trading 10? Anyways, if it sounds too good to be true, it's because it is. Let's go to the charts. I'm sorry for this rant. I just had to rant a little bit today. I'm very sorry. Let's go. Okay, so what we're going to talk about is these trades right here in gold, predominantly today, and I'll show an RTY trade also. But I want to get this point across. So why did I start off with the shark? Because remember, my concept of trading is to figure out what the sharks are doing and then follow them. Okay, so today was the perfect indication in both RTY and in gold of what I'm talking about. I mean, in oil, not so much because it kind of ran off. And they had trades that were valid, but not what I'm about to show you. So let me pull up gold, and let's get back over here to 10 o'clock. All right, so here we are with gold. This is the overnight open. As we've talked about, when price is hanging out at the overnight open, I've said many times, you probably really don't want to trade if it's just hanging out at the overnight open because it hasn't picked a direction. Remember, we're looking for a direction. We're looking for a direction that the market is committed to. Okay, so where are we going to find that? Well, like I kind of said before in the latest videos I've said, it's like, you kind of wait till like maybe after 10 o'clock or so. You see if you get a crossover of the red line, see if you get some donkey and channel moves, and then kind of see if something lays out. You're looking to see what are these sharks that we talked about just at the beginning of this video. What are they planning on doing? So here we are. You got this donkey and channel that keeps compressing. Why is it compressing? It's compressing because we're consolidating. And one of the things that the sharks know is that once the donkey and channel kind of makes a pierce one direction or another, a lot of times there's traders that chase these trades. And it's when they chase those trades out of those zones that the sharks clean out their stops, looking for places to pivot, then rotate back in the direction of the trade. That whole dynamic of what I just said in the last minute is exactly what you need to get through your head to understand this strategy and to allow yourself to be a trader that's not a gambler looking for the 90% off one day to pass BS, but instead, what would I do if I was trading my own real money where you can't gamble? And how you should be trading your evaluations and your PAs regardless of what these prop firms are throwing at you, okay? Trade them with discipline and purpose. So what's the discipline and purpose? We'll figure that out right here. So it's 10 o'clock right in here or so. And we got this donkey and channel being compressed on both sides. And we're hanging out at the overnight open. And honestly, we have been here for over an hour already. I mean, it really doesn't look like much promise, to be honest with you. I remember I was losing interest on gold. I actually was losing interest. And I was looking at oil, and then oil just took off and did some craziness that I missed over there. Kind of frustrating. So anyways, so let's go back to the core. We're looking for those donkey and channels to be pushed, which means we've picked a direction and we want them to pull it back from that direction so that they clean out the stops to one of our lines, our 1 minute gold line, our 5 minute red line, or the overnight open. Whichever one it is, that's the one we plan on trying to hit it hard and make our money. So let's look for that moment after 10 o'clock. Keep going. See these donkey and channels just keep compressing because The market is consolidating. You're staying out of that consolidation. That's where people steal your money. There's nothing going on. There's no direction. Just because it touches a line doesn't mean there's a trade there. So let's keep going. Keep going, keep going, keep going, keep going, keep going, keep going. Oh, here's a donkey and channel pierced to the long side. Okay, so let's blow this up right here. Now we got something to look at. All right, we pierced the donkey and channel to the long side. We're after 10 o'clock. Matter of fact, we're way after 10 o'clock because it's about 10:45 now, which, anyways. So now we want to see if we can get a pullback, smooth pullback to our 9 EMA, which is the 1 minute red line, 1 minute gold line, and then take a long because everything's in agreement. We're north of the 5 minute red line, so we're looking for longs. We're north of the 1 minute gold line, so we're looking for longs off of it. And we happen to also be north of the overnight open. That's not as important, but it doesn't hurt. So what happens? Well, okay. So we got a lower high here and a lower high here. So that is a smooth pullback. Okay, we're into the gold line. Once this candle closes, you're going to have your long right here, one tick above it. Oh man, next candle goes inside the gold line and closes inside the gold line and everything inside the gold line. So there's no more trade. Cancel the 1 minute gold line. Now we need to start looking because remember, they pierced the top. So they're looking. Now the sharks had the people chasing out of that consolidation. Okay. They had them chasing. Now they're cleaning out their stops and they're faking them out that we're going south now. We're not going long, but they gave you the signal right here that they really are going long. Okay. So what are we doing? Whoa. Okay. We're coming back to the overnight open or the 5 minute red line or both. Okay. We also have a very smooth pullback. Doesn't have to be smooth for the 5 minute red line, but it really does have to be smooth for the overnight open. What do I mean by smooth for the overnight open? Remember the overnight open, there can be all this noise up here going on. But what you're looking for before the trade is you're looking for it to reach. And that reach is a sequence of candles that have that piercingness down. And one of the signs of the piercingness down is that for example, on a long, is that the tops keep closing lower than the tops of the candle to the left. Okay. What do we see? We see that right here. The tops of the candles keep closing. Okay. So it's a good sign. Okay. Boom. Now we've pierced the overnight open. We didn't get to the 21 SMA, but we pierced the overnight open. So our long should be one tick above that once this candle closes. So that would be 23.4. Boom. Okay, we're in. Wow, we're actually in. All right. We're in a long. So what's the first thing I like to do? I like to manage my stop. Okay, that's the first thing I want to do. And I'm usually in with like a 20 tick target, 10 tick stop to start with. Doesn't mean that's where everything's going to stay. That's just to get me a target and a stop on the chart. Why 20 and 10? Because if I'm taking a trade and I'm not looking for 2 to 1 minimum, why am I taking the trade? Anyways, so here we go. Once this candle here pierced the top of this candle, I got my stop right here. Now, what do I need to do? Now I need to manage my target because my stop is getting really close to my break even now. So I'm excited about that. I'm excited about this trade. And what am I looking for? Well, I'm going to tell you right now, my 20 tick target when I entered would be 25.3, would be right here. Okay. Now, I'm going to tell you right now, if I'm in this trade, I don't want to get out at 25.3. I want to get out back up at the donkey and channel because that's the donkey and high, because that is most likely where they're going to bring it to. And that target is higher up. So let me run my target. Now I grab my target, okay, and I move it up to about a tick below this. So this is the high is 24.2650. So I'm at like 24.2640. Okay. So now I'm looking for $300, not $200 per contract. Got it? Off of this beautiful setup right here. Beautiful setup. Boom, 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 bam. Done. $300. What was the indication that we wanted to get involved? What was the indication that it was going to go long? It was the fact that the donkeying channel kept compressing, and it finally got pierced, and all the little chasers jumped in it there, and the sharks cleaned them out. The sharks sequentially all knew that they were going to drive it to a spot, turn around, reverse it, and go right back to the spot they came from. They do this crap all the time. So now we are now after 11 o'clock. We get after 11 o'clock. I am not looking for 1 minute gold line trades. 1 minute gold line trade needs a lot of fight and fart, a lot of fury, a lot of fight in them. There's no fight and fury really after 11 o'clock for those to happen. I mean, yeah, you can get 10 tickers here and there, but why take a 10 ticker when you got a 10 tick stop, for example, at the beginning? You really need be looking for 2 to 1s. Again, discipline. It's not gambling. You're not trying to gamble. You're trying to put high probability in your favor. Okay, so there's $300 right there per contract. Okay, simple, easy peasy. Okay, so now let's go along. What are we looking for when we get past, say, 11 o'clock? Well, I'm going to tell you what I'm kind of looking for if I'm still trading. I'm looking for that 5 minute red line to now start coming into play. Okay, 5 minute red line coming into play. That's what we should be looking for. What are the signs that the 5 minute red line is a good trade? Well, you really want to see a nice smooth pullback to it, but you got to remember it's a 5 minute moving average, even though it's on your 1 minute chart. So you're not concerned with the pullback being the same as a 1 minute candle, because remember, it's a 5 minute candle. So the price action in a 5 minute candle can be totally different than the price action in a 5 minute candle. Is totally different than the price action in a 1 minute candle, because there's so much more going on in there. So the pullback doesn't have to be really smooth. We'll see some examples here in a minute. So we keep going along. Donkey and highs, looking good. By the way, swing traders, once that donkeying gets pierced high or low, and it's after 10 o'clock, and you can find that place they're rotating, it's a great place to start a swing trade. Swing trade in this case would be all the way back to, say, the daily high. But anyway, so let's keep going. Are we getting any 5 minute red lines? Yep. Okay, here we go. All right, here's a 5 minute red line. So we came off a donkey and channel high. Nice. Donkey and channel high. And then that is a smooth pullback. By the way, this is where they get everybody leaning. Oh, we're going short. No, they're not. They're cleaning out your stops. Anyways, because they've already decided they're going long, they're cleaning out your stops. So boink, boink, long. And then I would have got knocked out here at even, or maybe a small loss. I would not have. I would not have made that trade. I would not have made money on this trade. The trade actually worked, but I'm way too cautious. Once it slammed way up here, I'd have had my stop following up in here. I would have got knocked out. I'm just telling you how I would have traded it. But then it rotated up. And then all of a sudden, it got to this point here, and it rotated back to the 5 minute red line. Now, let's talk about this. Is that a smooth pullback? Well, that is a pretty smooth pullback. To be perfectly honest with you, that's a pretty smooth pullback. The problem is we didn't create a donkey and high. Matter of fact, we really didn't even get back to the high of the last time we pulled to the 21 SMA. So this is not a very promising trade in my mind. Okay? So Why do I emphasize that so much? Because the damn thing worked. But that's okay. It's okay. Price action wise, that really doesn't look like it's going to work, because when it rolls back over from a lower point, then that's normally a sign that they're going to start stepping it down. But that's not what happened in this case. So no big deal. We're okay. So here we are. We got a new donkey and high. New donkey and high. Just remember, we're still looking for 5-minute red lines. And then boom, 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 boom. There we are. Right there. Now, is that a smooth pullback? Absolutely, on a 5-minute chart. That is a smooth pullback. Off of a donkey and high, back into your 21 SMA. You're looking for the break of this consolidation candle. There's another candle still consolidating. Boom, boom. Now, where are you looking to go to? You're looking to go back to the donkey and high. In my opinion, that should be your target. Minimum. Okay. To me, minimum. That should be your target. And boom, there you are. There's another $300, because that's exactly what that was. That was a $300 trade. So you $300 off the overnight open earlier, $300 off this 5-minute red line when you had that nice smooth pullback. It didn't meander its way to the 5-minute red line. None of that. You want that shark to move it, so that when the shark gets everybody cleaned out, the shark then moves it again. That's what you're looking for. You're looking for move, not meandering. You're looking for direction. Wham, wham. Okay? That's the sign. The sign is the wham, because that's where they're cleaning out the stops of the people that were coming along for the free ride. And then after they're done cleaning them out, they're going to run it right back so that they can all sit there and cry because they got knocked out. Are you the guy that they knocked out? That's how they're doing it. Okay? So quickly, I want to show you the RTY doing the same thing today, and then we're done. So here's the open. Now, what are we doing? We're waiting until after 10 o'clock. Let's just wait till after 10. Okay? So here's our donkey and high. Here's our donkey and low. It's 10 o'clock right here. We kind of go up, kind of go up, kind of go up. We create not only a daily high, a donkey and high, pullback, 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 pullback. No trade here because we never had a break to the long side off of the 9 EMA. We came straight back. I mean, if you can't, on a 5-minute chart, that you can't get a smoother pullback than this right here. Right to the overnight open, long, boom, back to the daily high. Done. I mean, I can't make the trades any easier than that. Honestly, that is just insanely simple. That's what you do if you're trading real money, or if you're trading an evaluation seriously and you want to learn how to trade instead of just gambling to pass a test that you're going to gamble again to try to get a PA payout, and you fall for the tricks of these prop firms. I mean, listen, I'm guilty of these things too. Okay. So while I'm preaching, I'm also preaching to myself. Everybody have a good day. I'll talk to you later. Bye.